The US-Canada partnership, once a model of open borders and trust, is now under severe strain as President Trump's administration imposes a sweeping 35% tariff on Canadian goods outside the Canada-US-Mexico agreement. A targeted 50% tariff on Canadian steel and aluminum disrupts deeply integrated supply chains, threatening jobs and raising costs for American manufacturers. These tariffs are seen as a strategic move to force Canada into concessions ahead of the 2026 CUSMA review, blending economic and political grievances and making resolution difficult. With 75% of Canadian exports heading south, the tariffs feel like a betrayal, transforming the world's longest undefended border into a growing economic divide. Despite ongoing tariff pressures and shifting global trade dynamics, Canada's true strategic advantage lies in its immense reserves of energy and mineral resources, assets that are not only abundant, but also highly sought after by its southern neighbor. The United States, despite its own resource base, cannot easily replace the steady flow of Canadian oil, gas, and minerals that cross the border every day. Nearly 4 million barrels of Canadian oil and over 8 billion cubic feet of natural gas flow south daily, powering American homes, fueling industries, and keeping transportation networks running smoothly across the continent. Beyond oil and gas, Canadian hydroelectricity lights up U.S. cities, while critical minerals like nickel, cobalt, and rare earths are essential for America's technological ambitions, from electric vehicles and renewable energy to advanced computing and AI. This deep, often underappreciated interdependence gives Canada a quiet but powerful leverage, as the U.S. economy relies on these stable, ethical, and reliable supplies to maintain its own growth and security. Canadian policymakers are acutely aware that while tariffs can target manufactured goods, America's need for Canadian resources is a lifeline that cannot be easily severed or substituted. This enduring reality underpins Canada's patient long-term strategy in the face of U.S. pressure, confident that its natural wealth will continue to shape the balance of power in North America for years to come. Prime Minister Carney's government is investing $500 billion in infrastructure projects across the country to strengthen and modernize Canada's energy and transportation networks, reducing reliance on the U.S. for trade and connectivity. Major expansions at the ports of Montreal and Churchill aim to open new routes for Canadian LNG and minerals to Europe, diversifying markets and strengthening ties with key allies. Canada is accelerating critical mineral development, positioning itself as a secure and reliable supplier for global high-tech industries. Rather than retaliate, Canada is turning U.S. pressure into an opportunity for greater self-reliance and global reach. This patient strategic approach aims to secure Canada's economic future, independent of shifting U.S. political whims. The Trump tariffs, meant to protect American industries, are driving up prices for U.S. consumers on everything from cars to canned drinks. Disrupted supply chains and higher input costs are hurting American manufacturers, especially in construction and automotive sectors. Many companies can't find domestic substitutes for Canadian materials, leading to delays and lost competitiveness. The tariffs create winners and losers within the U.S., pitting protected industries against those reliant on imports. The Peterson Institute estimates these tariffs could cost the average American household thousands per year. The policy's broad economic pain is fueling opposition from business leaders and industry groups across the country. Canada's response is deliberate patience, eschewing tit-for-tat tariffs in favor of diplomacy, legal challenges, and massive investment in infrastructure and resources. This calm, strategic posture appeals to U.S. allies and business groups also hurt by the tariffs, building coalitions for change. Canada's leaders know their energy and minerals are indispensable to the U.S., giving them confidence to withstand short-term pain. The strategy bets that economic necessity will eventually force the U.S. to seek a stable relationship. By 2026, Canada aims to negotiate from a position of strength, as a global partner, not just a dependent neighbor. This approach protects Canada's interests while preserving the vital cross-border relationship. A U.S. federal appeals court has ruled that President Trump exceeded his emergency powers in imposing some tariffs, which has sparked significant debate and controversy. This decision creates a major legal obstacle for the administration, potentially altering the landscape of executive authority. California, joined by a coalition of states, is leading lawsuits arguing the tariffs harm their economies and overstep presidential authority. These states contend that the economic damage is substantial and unjustified. The legal battle centers on whether the situation truly justifies emergency trade powers, a point of contention that has far-reaching implications. This raises constitutional questions about executive overreach, challenging the balance of power between the branches of government. These court challenges offer hope to businesses, which have been struggling under the weight of these tariffs. The legal actions also complement Canada's diplomatic approach as they seek to resolve trade disputes through negotiation and international cooperation. The outcome of this legal battle could reshape the balance of power over trade policy in the U.S. for years to come, influencing future administrations. The deep division within the U.S. over the tariffs gives Canada more room to pursue its patient, strategic course, potentially leading to more favorable trade terms. The ongoing U.S.-Canada trade dispute highlights the real dangers of pushing a vital ally beyond its limits. When tariffs and trade barriers are imposed, they don't just hurt the targeted country, they send shockwaves through both economies, disrupting essential supply chains and threatening jobs on both sides of the border. The close economic relationship between the U.S. and Canada has been built over decades, and it is deeply woven into the fabric of North American prosperity. Canada's vast reserves of energy and critical minerals are not just important, they are foundational to U.S. prosperity and its technological ambitions. As global competition, especially with China, becomes more intense, the U.S. relies on Canadian resources to fuel its industries, power its cities, and drive innovation in sectors like electric vehicles and renewable energy. Prime Minister Carney's bold investments in modernizing ports and expanding resource infrastructure signal a future where Canada is less dependent on the U.S. and increasingly connected to global markets. These strategic moves are designed to give Canada more leverage and flexibility in its international partnerships. If the U.S. continues down a path of protectionism and short-term thinking, it risks losing its privileged access to Canadian resources. As Canada diversifies its trade relationships, American businesses could find themselves at a disadvantage, facing higher costs and less reliable supply chains. True prosperity for both nations depends on cooperation, not confrontation. The deeply integrated economies of the U.S. and Canada thrive when they work together, sharing expertise, resources, and opportunities for growth. America's strength has always come from its alliances. Treating Canada as an adversary, rather than a trusted partner, undermines the very foundation of North American security and prosperity. The hope is that pragmatism and mutual respect will ultimately prevail, allowing both nations to restore the trust, collaboration, and shared prosperity that have long defined their unique relationship.